For me, taxation is at the heart of governance. Government does not create wealth. It is citizens that do. We are just fortunate that here we extract liquid gold and some other solid gold, etc. We sell and we make money. Otherwise, in every other jurisdiction, government creates the environment for citizens to prosper. And then government proceeds to use the instrument of taxation to appropriate a portion of that prosperity to provide infrastructure, to provide social services, to create robust social safety net so that we can have peace and stability.
The reforms we are implementing are therefore not about taxation for its own sake. They're about building a stronger fiscal foundation for long-term national development. The reforms seek to simplify the tax system, improve fairness, reduce distortion, encourage investment, promote voluntary compliance, and align taxation with productivity. We are moving from a framework driven by discretion and fragmentation to one anchored on clarity, certainty, and harmonization. Our reforms protect low-income earners while ensuring fairness across income categories. Minimum wage earners are exempt from personal income tax, while the burden on many low and middle income workers has been reduced.
There are moments in the life of a nation when conversations become more than discussions. They become defining decisions about the future. From Monday 11th to Thursday 14th May 2026, Abuja became the center of one of those defining conversations as tax professionals, policymakers, economic experts, government officials, academics, and industry leaders gathered at the Bola Ahmed Tinubu International Conference Center for the 28th Annual Tax Conference of the Chartered Institute of Taxation of Nigeria, CITN, with the theme, Tax Reforms and Global Relevance, Positioning Nigeria's Tax System for a Sustainable Future. For 4 remarkable and unforgettable days, minds met, ideas collided, and critical questions about Nigeria's economic future took center stage. The theme speaks directly to the realities of a rapidly changing global economy and to Nigeria's urgent need for a tax system that is modern, transparent, competitive, and capable of supporting sustainable national development. And perhaps, no discussion could have been more timely. This conference came at a historical turning point in Nigeria's fiscal journey, following the groundbreaking work of the Presidential Committee on Fiscal Policy and Tax Reforms led by Mr. Taiwo Oyedele. After months of consultations, policy reviews, stakeholder engagements, and technical reforms, Nigeria ushered in a new era of tax administration with the promulgation of 4 landmark tax reform laws enacted to transform and modernize the nation's tax system. The implementation of these reforms officially commenced on January 1st, 2026. The 4 new tax reform acts are the Nigeria Tax Act 2025, the Nigeria Tax Administration Act 2025, the Nigeria Revenue Service Establishment Act 2025, and the Joint Revenue Board Establishment Act 2025. These reforms are designed to simplify Nigeria's tax structure, harmonize tax administration across different levels of government, eliminate multiple taxation, improve compliance, reduce the burden on low-income earners and small businesses, and position Nigeria within the global standards of fiscal governance. Beyond intellectual engagements, the conference also created opportunities for relaxation, networking, and social interactions among delegates. The 28th Annual Tax Conference was kicked off with a colorful hospitality night held on Monday evening, specially organized to warmly welcome delegates from across Nigeria and beyond. The evening provided a relaxed atmosphere for networking, cultural exchanges, and strengthening professional relationships among participants. On Tuesday, the 12th of May, the intellectual feast began. The lead paper, which was centered on the theme of the conference, was delivered by the Honorable Minister of Finance and Coordinating Minister of the Economy, Mr. Taiwo Oyedele.
It is both a privilege and a pleasure to address this distinguished gathering at the 28th Annual Task Conference of the CITN. Let me begin by commending CITN for its consistency in advancing professionalism, strengthening tax administration, and shaping fiscal policy discourse in Nigeria over the years. This year's conference theme is particularly significant because it speaks directly to one of the most important tasks before us as a nation, which is building a tax system that is globally relevant, economically competitive, socially equitable, and fiscally sustainable. I consider this conversation not merely technical, but strategic to Nigeria's future. We are living in a period of profound economic transformation across the world. Economies are becoming increasingly digital. Capital is more mobile. Supply chains are changing. The government faces rising pressure to finance development sustainably. At the same time, citizens are rightfully demanding greater accountability, fairness, transparency, and better public services. In this environment, tax system can no longer remain static. Countries that fail to modernize their fiscal framework risk losing competitiveness, discouraging investment, widening inequality, and weakening economic resilience. These are risks Nigeria cannot afford to take and opportunities we cannot afford to miss. Nigeria must therefore position itself not only to respond to global changes, but to compete effectively within them. So, our tax reform became necessary because for many years, Nigeria's tax system suffered from structural weaknesses, from multiplicity of taxes to fragmented administration, excessive reliance on a narrow revenue base, weak compliance, and high level of informality. Businesses face overlapping levies, unpredictable enforcement, and rising compliance costs. Citizens often perceive the tax system as unfair because the burden was unevenly distributed. At the same time, government revenues remained insufficient relative to our developmental needs. This model became untenable and the system was simply unsustainable. The reforms we are implementing are therefore not about taxation for its own sake. They're about building a stronger fiscal foundation for long-term national development. Now let's turn to the philosophy behind the reforms. Our approach is guided by a simple principle. A good tax system should raise revenue efficiently, support economic growth, protect the vulnerable, and strengthen trust between government and citizens. Accordingly, the reforms seek to simplify the tax system, improve fairness, reduce distortion, encourage investment, promote voluntary compliance, and align taxation with productivity. We are moving from a framework driven by discretion and fragmentation to one anchored on clarity, certainty, and harmonization. To be globally relevant, we must be competitive. And competitiveness today depends significantly on the quality of a country's fiscal architecture. This is why our reform incorporates internationally recognized best practices while remaining sensitive to Nigeria's realities. Examples include progressive and inclusive taxation. Our reforms protect low-income earners while ensuring fairness across income categories. Minimum wage earners are exempt from personal income tax, while the burden on many low and middle income workers has been reduced. This strengthens inclusion and reduces inequality. Number two, competitive corporate tax environments. We recognize that investment capital is mobile. The planned reduction in companies' income tax rates is therefore one example designed to improve Nigeria's attractiveness as an investment destination while preserving fiscal sustainability. Our objective is clear: grow the economy and revenue will follow. Support enterprise, encourage expansion, and decent jobs will be created. Number three is modern VAT framework. We are modernizing the VAT system through expanded input VAT credits. Many of us into services will be claiming input credit now for the very first time since VAT was introduced in Nigeria in 1993. Clearer exemption and zero rating for essential goods and services. This reduces cost build-up within the economy and improves efficiency across value chain. This also helps to moderate inflation. Another one is tax harmonization. One of the strongest complaints from businesses has been the burden of multiple taxes and levies. We are therefore working with subnational government to harmonize taxes, improve coordination, and reduce the compliance burden on taxpayers. A fragmented tax system cannot facilitate a globally competitive economy. We're grateful to the 15 states that have enacted the tax harmonization laws in their various states and urge others to do the same sooner rather than later. Another example is taxpayer protection and confidence. A modern tax system must protect taxpayers as much as it empowers tax authorities. The newly established Office of the Tax Ombudsman and the improvement we've done across dispute resolution mechanisms are designed to reduce arbitrariness, strengthen accountability, and build trust. Predictability and fairness are essential to compliance and investment confidence.
How does the tax reforms promote sustainability?
Nigeria cannot continue to finance development primarily through borrowing. We must build a fiscal system capable of sustainably supporting critical infrastructure, quality education, affordable healthcare, security, and social protection. But sustainability is not only about revenue mobilization, it's also about supporting economic growth, reducing inequality, protecting vulnerable population, and encouraging productivity. This is why our reforms are designed to be growth-oriented, disinflationary, and investment-friendly. The future of taxation is digital. Technology is reshaping tax administration, compliance system, audit processes, and taxpayer engagement globally. Nigeria must not be left behind. We're therefore prioritizing data integration, automation, digital filing systems, and technology-driven compliance framework. Recent examples include the VAT fiscalization that many of you are familiar with already, the National Single Window, and Rev 360. The goal is simple: reduce human discretion, increase efficiency, improve transparency, and make compliance easier and cheaper. Now, what's the role of tax professionals? The success of reform depends not only on policy, but on people. Tax professionals occupy a critical position in this transformation. You are taxpayers, advisors, interpreters, educators, administrators, and custodians of integrity within the fiscal system. This is one of the reasons for the introduction of the tax agent accreditation in the new tax laws, to ensure there is an evidence-based approach to reward professionals for doing the right thing and for administering consequences for violators. CITN therefore has an important responsibility to strengthen ethical standards, deepen professional competence, and support taxpayer education and enlightenment. At a time when misinformation can easily distort public understanding, professional leadership matters more than ever. You must elevate national interest over and above your immediate aspirations. Now, the work ahead of us is enormous. We must remind ourselves that reform is a process, not an event. Therefore, challenges remain, ranging from transitional issues, intergovernment coordination, informal sector integration, to institutional capacity and public trust. Addressing these challenges will require sustained political will, stakeholder engagement, institutional discipline, and continuous learning and improvement. But I remain optimistic because Nigeria has the talent, market skill, entrepreneurial energy, and an undeniable potential to build one of the strongest fiscal systems, not just in Africa, but globally. But a globally relevant tax system is not one that merely collects revenue. It is one that supports competitiveness, encourages enterprise, protects citizens, attracts investment, and strengthens national development. That is the future we are building. The journey may be demanding, but it is necessary. And history consistently shows that nations with strong fiscal institutions build stronger economies and more resilient societies. Let me once again commend CITN for sustaining this important platform for national dialogue and professional leadership. Together, let us work towards a Nigerian tax system that is modern, fair, globally competitive, fit for today, and sustainable for generations to come.
His paper was further discussed by Dr. Tope Fasua, Special Advisor to the President on Economic Matters. Delivering the welcome address at the opening ceremony was Dr. Mrs. Caroline Ndubisi, Chairman, 28th Annual Tax Conference Planning Committee of the CITN.
This conference is not just another professional event, it is a meeting of minds, a convergence of experience, and a platform where the future of Nigeria's tax system is being shaped. The theme before us, tax reform and global relevance, positioning Nigeria's tax system for a sustainable future, speaks directly to the reality of our time. We are living in a world that is changing rapidly, economics are evolving, technology is redefining how businesses operate, borders are becoming less significant in commerce, yet more complex in regulation. In the midst of all this, taxation remains one of the most powerful tools available to any nation. But the question we must ask ourselves are these: are we ready? Are our tax systems structured to meet global standards? Are our policies aligned with sustainable economic growth? Are we building a system that is fair, transparent, and trusted by the people? Tax reform is not just about changing tax laws, it is about changing outcomes. It is about creating a system that supports businesses, protects citizens, and drives national development. Global relevance demands more from us. It demands innovation. It demands accountability. It demands that we move from reactive systems to proactive strategies. And above all, it demands that we work together. This is where the importance of this conference becomes clear. This is the time for bold thinking. We must embrace digital transformation in tax administration. We must strengthen compliance through trust and not fear. We must ensure that our systems are inclusive, leaving no sector behind. And we must prepare Nigeria not just to participate in the global economy, but to compete effectively within it.
The President and Chairman of Council of the Chartered Institute of Taxation of Nigeria reaffirmed the Institute's commitment to promoting professionalism, ethical standard, policy advocacy, and capacity development across Nigeria's tax ecosystem.
The annual tax conference organized by CITN has evolved into the largest gathering of tax professionals in the entire continent of Africa and globally. As a matter of fact, nowhere else in the world, apart from Nigeria, do we see such a significant gathering of tax professionals under one roof. As the leading professional institute in taxation in Nigeria, CITN has been at the forefront of excellence, ethical standard and professionalism in the tax profession for over 44 years. Since the era of the late Doyin of taxation, Chief David Ajibola Oloronleke FCTIT, today, CITN has been a major stakeholder of the tax system in Nigeria, contributing to taxation and fiscal reform through advocacy and education. Today, we have converged for the 28th time tax experts from across Africa, Nigeria, and beyond critically examine the interconnectedness of tax reforms and fiscal development from the lens of sustained global relevance, with a view to providing actionable policy recommendations for the consideration of government and stakeholders alike. The theme, Tax Reforms and Global Relevance, position Nigerian system for sustainable future, comes at a pivotal time in Nigerian fiscal journey, as Nigerians shift from a long-standing dependence on oil towards a more sustainable fiscal model. Taxation has rightly emerged as a central pillar of our national revenue strategy. As tax professionals, our contributions have never been more critical than now, particularly with the reference to Section 33(1) and Section 147 of the Nigerian Tax Administration Act, NTA 2025. As the president of the Institute, I call on all members across the public and private sectors to rise to the demands of this moment and support the implementation of this reform. Every CITN member must become a stakeholder in this reform agenda by deepening their technical know-how, upholding highest ethical standards, and providing sound, objective guidance to taxpayers, institutions, employers, and government. We must firmly reject practices that undermine compliance. Instead, uphold the principle of transparency, fairness, accountability in all engagement. As professionals, we must live by example by ensuring full compliance with our own tax obligations before encouraging others to do the same. CITN stands ready to support government, including the NRS, State Internal Revenue Service, the JRB, National Tax Policy Implementation Committee, Office of the Tax Ombudsman, and all stakeholders in achieving the objectives of this reform.
The keynote address was delivered by the Vice President of the Federal Republic of Nigeria, Senator Kashim Shettima, GCON, who was ably represented by Dr. Tope Fashoa, Special Advisor to the President on Economic Matters.
We meet at a pivotal hour in our national journey. For too long, Nigeria has navigated the global economy like a giant with his hands tied, rich in potential, yet constrained by a fiscal architecture that belonged to a bygone era. Today, we are no longer content with potential. Under the renewed hope agenda, we have moved from the lethargy of contemplation to the kinetics of reform. We have put in considerable energy and intellectual gravitas into a reform tax and revenue system, which culminated in the tax reform signed into law by Mr. President in June 2025, and which became into effect on the 1st of January 2026. Our theme today, tax reforms and global relevance, positioning Nigeria's tax system for a sustainable future, is not a mere slogan. It is a call to action and an affirmation of a constant imperative. To position Nigeria for a sustainable future, we must first address the fundamental imbalance in our books. To reclaim global relevance and soar higher than ever before, we all know that Mr. President has set a clear and concise target for the Nigerian economy to hit $1 trillion by the turn of the decade. This is not a target built on wishful thinking. It is a target built on revenue. Many pundits have complained about our high revenue to debt servicing ratio. But the only antidote to this anomaly is to drive revenue for government based on well thought through and properly established fiscal laws. We are on a solid course, as our current tax reforms are the primary engine for this leap, and we have been able to close that chasm by bringing down this ratio from a galling high of 120% in December 2022 to 68% as at the close of 2025, even as we continue to improve the metrics. Already, by streamlining our tax codes and broadening the tax base, we are generating the lifeblood necessary to improve our national balance sheet, transitioning from a nation that borrows to survive to one that invests to thrive. We are also further enabled to approach global credit markets for accelerated developmental financing with a healthier balance sheet. We are also reducing the debt servicing to GDP ratio. Perhaps the most fundamental implication of these reforms is their roles as a catalyst for a long overdue elite consensus. For decades, a vast portion of our economic activities, the legendary Nigerian informal sector, has operated in the shadows. This camouflage has not only skewed our data, but has also allowed inequality to fester. The consensus we are building today is a social contract of shared sacrifice. It is an agreement, indeed, that the wealthy must lead the way in transparency, and that the informal sector must be incentivized to join the formal fold. Illicit financial flows must ebb to an abrupt end, and major transactions with considerable financial value will no longer be done under the radar as used to be the case. The National Revenue Service, NRS, has invested greatly to elevate the technology for surveillance and accountability, and we say kudos to the leadership of that transformational institution.
Goodwill messages came from different quarters, all centered on the theme of the conference. Throughout the 4 days that the conference lasted, participants engaged in insightful presentations, technical sessions, strategic conversations, and high-level policy dialogues focused on the future of taxation in Nigeria and its relevance within the global tax landscape. Major highlights of the conference were the 2-day plenary sessions, where distinguished lead paper presenters delivered thought-provoking papers on critical issues surrounding tax reforms, fiscal sustainability, global competitiveness, and the future of tax administration in Nigeria. These presentations were followed by engaging discussions from carefully selected discussants who provided expert analysis, diverse perspectives, practical insights, and policy recommendations. The plenary sessions created an atmosphere of intellectual depth and constructive engagement as stakeholders examined the opportunities and challenges within Nigeria's evolving tax system. Key discussions centered on evaluating the early outcomes of Nigeria's 2025 tax reform, taxation, business competitiveness and investment climate, aligning fiscal reforms with enterprise growth, transforming Nigeria's tax administration for efficiency and trust in the new fiscal order, subnational fiscal governance and revenue autonomy, strengthening state and local revenue system under the Joint Revenue Board Act 2025, and building a culture of voluntary compliance and institutional trust, dispute resolution, ethics, and citizen engagement. The young ones, the future leaders of tomorrow, were not left out. There was a national tax debate which was centered on whether the Nigeria 2025 tax reform will benefit the economy or hurt it.
99.965%. That is the percentage of wealthy citizens of Nigeria that avoid complying with the tax system. This number was reported by the FIRS. May our soul rest in peace. I will begin this debate by doing something unusual. I am going to agree with the proposition side. The tax reform is necessary. The tax reform is beneficial. However, a major oversight is looking at the tax reform from the point of view of its intentions and not its outcomes. And that is the reason for this debate today. We are going to look at the economic reality and the outcome of this tax reform. My name is Tony Igwe Oyinye, and I am a 300 level economics student of Nnamdi Azikiwe University. And I'm here to oppose the motion and to convince you that the 2025 tax reform will hurt the economy more than it will benefit it. A Peruvian economist, Hernando de Soto, in his seminal work, The Mystery of Capital, explained why in sub-Saharan Africa, the informal sector, they tend to avoid paying taxes, not out of malice, not out of predetermined malice, but because the tax system is not tailored to fit their peculiarities. This is the case in Nigeria, where we have 93% of the population employed in the informal sector. We have a country that is one of the 7 countries make up half of the unbanked population of the entire world. A country that's suffering from power outages and infrastructure deficits. And in urban boardroom, in a boardroom in Lagos State or in Abuja here, someone is saying tax tin registration will be mandatory, e-invoicing to a woman that can't even speak English. So we see the issue of compliance in tax reform is something that you cannot brush aside with the laws. Now I will explain how economic hurt comes into play.
The issue for consideration today is not whether the 2025 reforms is hurting or benefiting the economy, but whether the 2025 tax reforms will eventually benefit the economy more than how it will hurt it, which I stand today to say yes to. A cursory examination of the key terms reveals how government policies like the 2025 reforms, which was enacted into law on June 26, 2025, are affecting how resources are being shared in the country. My arguments are built upon 3 premises: the reduction in compliance costs, the reduction in revenue leakages, and the improvement of fiscal sustainability. The 2025 tax reforms ensures a sustainable reduction in the cost of compliance. Prior to the 2025 reforms, the cost of honoring tax obligations was grave. ICT companies, for instance, had to suffer with 4 different levies, which were applied on the profit of the same company. The fragmented nature of the tax laws empowered unqualified entities to defraud other people. Even the Tax Promax platform, which was introduced by the Federal Inland Revenue Service, encountered several glitches, with certain actions still requiring fiscal intervention. However, the 2025 reforms remedies all this with the introduction of the single 4% development levy, which cures multiple taxation. It also allows businesses to choose and adopt their own automated systems, which would, if they have the capacity to do so. It also specifically defines who tax agents are and criminalizes the impersonation of tax officers, thereby empowering individuals to report those who attempt to defraud them. These provisions simplify the cost of compliance. When businesses spend less in paying taxes, significant resources are released for productive use. When this happens, it leads to an increased productivity and ultimately leads to a faster economic growth.
I am Badmus Aminat from Obafemi Awolowo University, and I stand firmly opposed to the motion that the 2025 Nigeria's tax reform will benefit the economy more than it will hurt it. Yes, Nigeria needs a better tax administration system, and the 2025 tax reform represents one of the most significant economic redesign in decades. However, I still firmly believe that it will hurt the economy more than it will benefit us. My position is based on this argument. Firstly, this reform puts pressure on large businesses, and it has indirect consequences on the economy. Large businesses are expected to operate a corporate tax expense exposure of 34%, 30% company income tax, 4% development levy, alongside an increase in capital gain tax from 10% to 30%. We all know these businesses do not absorb costs passively. They respond through price adjustment and operational restructuring. These affect market prices, these affect employability. Honorable judges, an increase in capital gain tax from 10% to 30% has reduced return on investment. A weakened return on investment and high market price in an already inflationary economy will slow business expansion. It will slow economic growth and development. Secondly, why this reform attempt to include the informal sector into the tax system? Practical conditions required to fully benefit from this reform can be out of their reach. My opponents may argue that this reform helps small business through a 0% tax rate. To access these benefits, businesses must first transition into a formal structure. Transitioning requires formal registration, it requires compliance, it requires some reporting standards Nigerian businesses are not prepared for.
Participants described the conference as timely, impactful, intellectually enriching, and solution-oriented, especially at a period when nations are under increasing pressure to build tax systems that are fair, efficient, technology-driven, and globally aligned.
My key takeaway from this conference is that it has opened my eyes beyond my previous knowledge that government is trying to see how to improve on their social contract to the people at large. While trying to get revenue from them, they are trying to increase their own expenditure to meet the needs and the yearnings of the populace at large. Before now, we have seen government collecting revenue without a corresponding social contract from their end. But from this tax conference, we have seen that government on their end is trying to meet the needs of people aside from collecting revenue from them.
Now, what has been your key takeaway so far from the conference?
Especially on the tax reforms, some persons think about its complication, but I think the conference has made it moving towards that it's more simplified than we ever thought. Like the area of overlapping that has been discussed, because a lot of us as accountants, we get worried about the tax reform and the 2025 accounting year. The tax reform commenced 2026, and a lot of accounting that will be doing 2025, a lot of accounting will be doing 2025, which we have not reported yet. We get worried and like, what are we going to do? Are we going to treat it as the previous old rate for the company income tax, or we are going to do that of the new company income tax? But that has been simplified for us, that for 2025 accounting year that ends with 2025 December, the old rate should be used. Then if we have any overlapping that enters 2026, assuming it's up to March or April, we will now use the new rate, which is the new tax reform. So I think it has made a lot of accountants here to appreciate the tax reform and make them to appreciate their job they'll be doing when they get back.
My takeaway from the conference so far is that I think there's an increase of knowledge about tax compared to what it used to be. So there's an increase of knowledge.
From the conference, a lot of takeaway. The conference is looking at the reform entirely, especially in the area of using technology, in tax administration. And you agree with me, the way businesses are being run now is no longer brick and mortar. Everything has gone digital. So tax administration also need to go digital. And the various tax authorities are engaging a lot of technology to improve taxation. And that has been the major focus of this conference. And that is a very good takeaway from me.
One message echoed clearly throughout the conference halls. Nigeria's future economic sustainability depends significantly on the strength, credibility, and adaptability of its tax system. On Thursday, the 14th of May, delegates participated in sporting activities designed to promote wellness, teamwork, unity, and camaraderie among members and conference attendees. The activities added energy and excitement to the final day of the conference while reinforcing the importance of balance between professional excellence and healthy living.
President, our own Mr. Innocent Agua, as he takes the official key. Please put your hands together for Mr. Innocent Agua. He has officially kicked the ball. So, there's another goal loading. Thank you.
The conference eventually climaxed with a glamorous gala night held on Thursday evening, bringing the memorable four-day event to a fitting close. The gala night featured entertainment, music, cultural displays, appreciation of sponsors and awards to district societies and students that emerged victorious at the 2026 National Tax Debate Competition. Networking and celebration of the achievements and success of the conference. As the curtains close on the 28th Annual Tax Conference, stakeholders leave not only with fresh ideas and renewed commitment, but with a shared vision, a vision of a Nigerian tax system positioned to compete globally, drive sustainable growth, and support national prosperity for generations to come. And once again, the Chartered Institute of Taxation of Nigeria has demonstrated its leadership role in shaping the future of taxation and fiscal policy in Nigeria and across Africa. My name remains Chamako Hauchi. Thank you for watching.